What's good, YouTube? It's your boy Azaka FX. Now, let me tell you something that might completely change the way you look at trading. You do not need to win majority of your trade to make money and be profitable. In fact, you can lose 7 out of 10 trade and still be profitable. The difference between the trader who survives in the market and the trader who blows their account isn't always their entry strategy. It is how much they risk when they are wrong, how much they make when they are right. And in this video, I'm going to be showing you exactly how risk management and risk to reward ratio can turn a strategy with a mediocre win rate into a profitable trading system. Without further ado, if you've not subscribed to the video or our channel, definitely subscribe. And this is our $2 to $100,000 challenge, where we've had 3 parts now. Part 1 we went from $2 to $6 thereabout, and then in the part 2 went from $6 to $10, and in the part 3 we took a heavy -1 that brought us back to $5. But in all, we are still profitable. This is the account, still the same account, but this is not what we are here to discuss today. What we are here to discuss today is something very important: money management. Now, as you can see right here in our screen, somebody actually reached out to me and said, you've been talking about money management as a form of risk management, but can you really explain to me what money management as a form of risk management is? And I actually promised him that I will make an entire video based off of it. Actually, very important. Risk management is more important than what strategy, ladies and gentlemen. So without further ado, let's go straight and discuss today's risk management. Now, let's say for this scenario, the first thing you need to ask yourself is that which amount of capital are you working with? And if you ask me, Azaka, what's the capital you recommend for any trader, not someone that is like a pro that can grow any amount? Let's say a mediocre trader, let's not use the word mediocre, but let's say an average trader to start trading with. I will tell you $100. That is what I will tell you. I will tell you $100. Now, it is actually possible to grow any amount of money it takes: $5, $2, $1,000, $1 million. But the more capital you have, the better for you. Why do you need, if you don't have that skill, if you're not trading to educate, why on earth would you be trading a $5, $2 account, except that is all you have? Otherwise, I would suggest go and look for the minimum of $100 and start your trading journey if you are looking to make money in the trading market. But if you are like me, that yes, we have our normal accounts where we just trade to make money, then we have the accounts whereby we trade to educate, like all these challenges I do, where I take a very small amount of money and to a very big amount of money to actually educate you that yes, it is possible. So you will not think that capital is the reason you are not profitable. Ladies and gentlemen, capital has nothing to do with the reason you are not profitable in the forex market. But that is for that. Now, if you have $100 and you are using money management, I call it MM. If you are using money management, what then do you do? $100 is this. The rules of money management says that because we don't trade using stop loss, we have to accommodate the loss first beforehand before we start trading. It's actually quite easy. If you see me going full margin on a $10 account, that means I have a $100 portfolio. I am to risk a certain percent of my portfolio in that trade. And in my own case, you can risk what you are comfortable with. Most people are comfortable risking up to 30% of their portfolio. If you risk 30% of your portfolio, that simply means that you are risking $30 from this $100. On the bad run, let's paint a negative situation. Let's say you are so bad in trading that you can take 2 wins in a row, and let's say you are risking $20. So $100, you're risking 20%. $100, you're risking 20%. So that means you can take out $20 from this particular $100. Let's say you have thereabouts 4 losses in a row. So you risk the first $20. You risk the first $20. You blow that one. You risk the second $20, you blow that one again. You risk the third one, you blow that one again. And on the fourth one, you actually were able to grow it. And now $20 on the minimum, if you know what you are doing as a day trader, you should be able to make 200 to 300%. So that means Even if I'm the one, I should be able to make what extra $60 from my what $20. Now you've lost $40 beforehand, right? But in then this particular one, you actually made $60. So when you make this $60, that means that you are already profitable even after taking 3 losses in a row. Now, this is me painting a negative situation. If you are in the inner cycle, you will know fully well that we don't take 3 losses in a row. Rather, it's the exact opposite. We take 5 wins in a row, 4 wins in a row before maybe taking one break even. And that is if maybe the weekend is already approaching and all of that. We take one break even or we take 1 losses. I think I would make an entire video at the end of every month about how our inner cycle was, whereby I will relate everything we did in our inner cycle to what all that I have been teaching in this channel. So you see it that even with 3 losses in a row, by the time you have 1 win, you will still be profitable. Now this is the difficult part, because this part has to do with your what psychology. This part has to do with your what psychology. If let's say you had the first, we are humans, and we were built to accommodate losses more than we were built to accommodate wins, aka trading PTSD. So trading trauma is actually real, ladies and gentlemen. You had your first loss. You took your first trade, it was a loss. You took your second trade, another loss. You took your third trade, another loss. And on the fourth one, you have your win. The only thing that will stop you from being profitable using what money management is what by the time you have a bad risk to reward ratio, something called RR in this word space. For every trade you target, I said 300%, right? If you have 300% growth, that means you are using a 1:3 RR. In our inner cycle, our trade averages between 1:3 to 1:5. The middle ground being what 1:4. That means we should be able to make what 20, 40, 80. 20, 40, 60. We should be able to make $80 profits on a 1:4 RR. Maximizing that risk to reward ratio is important. Do not close your trade prematurely, because if you close your trade prematurely, like I always, let me show you guys. Look at the screenshots right here in the screen. You see the screenshots right here in the screen. This is actually a trade we took, and on taking this trade, I have to tell them not to close that trade prematurely, because if they close the trade prematurely, that means they've ruined their risk to reward ratio. And at the end of the, like I told them in the group, at the end of the week, you will notice that you are not making as much profit as you are supposed to be making. So the essence of money management is what risking a certain percent. Since you're not going to use stop loss, do not just go and slap your $400 and start imagining it that you saw Azaka imagining $100, so therefore you want to do the same thing. No, that $100, there is already risk management attached to it. That $100 is the stop loss that you just don't know. So you find a tolerance level. Everybody have a different risk tolerance. For most people, 30%. For me, 50% is okay with me. I have a very high risk tolerance. So if let's say I can risk what 50% of my entire portfolio, I'll be fine. So that means I can fund $100. After funding this $100, I would risk 50% of that $100, which is $50 on a particular trade, and I will be what just fine. Now you'll be asking me, why do you have that? Is because I know my win rates. I trust my system. This high risk tolerance did not just come. I was not born with it. It came as my win rate increases. It came as my win rate increases. As I came to see that, yes, wow. And by the way, even if, like I said in my last video, when I took a loss in this particular $22 to $100,000 challenge, even if with my strategy, with the way I trade, with the risk to reward ratio I practice, even if I take a loss, it's not going to clear off my entire $50. It's not going to clear it off. That is just how my strategy works. It's not going to, I'm probably going to lose maybe something like $25 or $30 from this $50. And then I'm not going to still add more money to it. The $20 that will be left from it, I would actually be able to regrow it back up easily. That is if I have a -1 on my very first trade, which is rare. If you're in the inner cycle, you can testify to this. We don't have -1s on our very first trade. We have winning streaks, then we have 1 loss, then we continue on our winning streaks. That is how it's supposed to be, ladies and gentlemen. That is money management in its essence. Risking a certain percentage of trade, risking a certain percentage in every particular trade you take. For stop loss management, you already know what it is. It's basically using risk to reward ratio. So after knowing that, okay, my risk to reward ratio is 1:4, and my stop, let's say my risk to reward ratio is 1:4, my stop loss is 50 pips, and I have a risk to reward ratio of 1:4. I'm taking a buy move. This, and I'm risking 1:4. In my one now, my risk tolerance is, let's say, 25%, which is a quarter of my account, and I have what, $100. I have $100. Simply means that since I'm to risk $25, I'm to risk $25 in each of my trade. So if I enter here, I would enter here, I'll play, okay, this my entry is supposed to be here. That means my limit, of course, because you can't do all of this with perfect execution. This is why we don't use stop loss management, but rather what, money management, because it's happening so fast. If you are using stop loss management, that means your entry has to immediately come using what, buy limit or sell limit whatsoever, depending on the scenario. So you enter here, your limit here, you calculate the lot size. That, okay, my stop loss is here allegedly. So whichever lot size would allow me to take a $25 loss right here, right, would be what I'll be using. Then I will then take my what, take profits to be here. So 4 of this is what I'm actually aiming for. So that is just stop loss management. But money management is, what we just explained. It's your boy Azaka FX. This week is a beautiful week. We're actually going to be publishing, once we have a conservative signal, we'll be publishing another video on our what, $2 to what, $100,000 challenge. And you should know, just because I'm trading $2 to $100,000 challenge, which is going to only come from what, our conservative signals, I will still be trading my aggressive models. We have conservative model and aggressive models. Conservative model have 95% win rates. That is why I only trade it on what, the challenge. But just because we call it aggressive model does not mean our win rate is bad. We still got about 75% win rate. But I don't take that risk when it comes to my challenge, especially once the challenge is already reaching that close to $50,000, $20,000, and hundreds of, a lot of millions of naira and thousands of dollars. It's your boy Azaka FX. See you all in the next video.